Let's welcome in our next guest on the show, Raunak Onkar, Head Research, PPFAS Mutual Fund is now joining us. Raunak, thank you so much for taking out time for us. You are one of the few people or, one of the few funds that invest globally as well. Can you talk about what's happening with some of these technology companies?
So interestingly, what happens is a lot of these stocks, if you see Google, it grew its profit margin by 20%. If you look at Facebook, it's 60% net profit growth year on year. And you wonder why these things happen. So there is this trend of digital advertisement that is growing over a period of time. It's eating into the other sectors of advertisement space like traditional media. Plus, it's growing on its own as organically all over the world. And these companies, they are also highest market share leaders in some of the products that they are using. Like, for example, Google has 5 products with $1 billion active user, 1 billion active users. Facebook has 2 products with 1 billion and more active users. So it's a huge advertiser space, and targeted advertising is something that is picking up in the minds of advertisers. They have also learned how to use the platforms very well, because the quality of ads that you see now targeted towards you are also significantly better than what they were a decade or 5 years back. So I think that technology is playing a big part for these companies to grow their earnings and exposure to all the markets that they're approaching in.
Do you think buyback is one of the key reasons why some of these large names are also liked by investors? Every year they do big buybacks. I was just reading somewhere that Apple's buyback would by far be one of the biggest.
Yes. So Apple is a different case. In terms of in terms of Google and Facebook, the buyback values are significantly smaller as compared to the balance sheet. They need capex, but at the same time they keep generating cash. But the idea is the cash can be used to acquire some other company or some other technology which will drive the growth in the future.
So what do you do in this market, Raunak? I mean, do you buy more of the same because you think the good is only going to become better and the poor will remain poorer? Is that the kind of market that we're staring at?
So what we stick to is, first is this a good business to own? You understand that first. Are these people capable of running the business over a long time, and have they demonstrated good business acumen in the past? And the most important thing is this the right price to buy it? So if it is not the right price and the 2 other criteria fit our bill, we wait. There is no need to rush and put your cash for something which is expensive and you know it is expensive. So we wait for the opportunity, and since we are diversified geographically, the valuations in other markets are not as expensive for some of the companies that are there in India vis-a-vis the earnings growth that we see.
Fair point. So where else are you, hunting in this market, or are you just sitting on what you already own and seeing where the market goes? Because you've got quite a bit of, question marks still looming large. You don't know which way crude is going. You don't know how strong the earnings recovery is going to be, whether this is a trend in place that you're seeing in this quarter. And then, of course, the big one, politics. With Karnataka onwards now up until 2019, politics is going to really dominate the market sentiment, I'm guessing.
What looks like sitting around and not doing much is actually doing a lot of work in the background, trying to build our competence, trying to reach our entire universe of coverage of stocks that we have, and make sure that we know all these businesses very well, and we know what is the right price to enter these stocks. So it looks like we're sitting around, but actually the research team is busy looking at different sectors and companies and building our knowledge.
Right. So, you own a lot of private sector banks, so you had private sector banks like HDFC in your portfolio earlier. We had Adrian Movad, one of the well-known investors today, well-known strategist. He said that still good, well-run banks, despite the valuation, look cheap. Would you agree, or would you go with names like, the corporate banks which are suddenly moving 5-7% based on results?
I think it's an interesting point, because a lot of these banks have spent the past couple of decades building their franchise and network, and that cannot be taken away. Second thing that affords them is a huge base of depositors and savings account that keep opening every time as the corporate accounts keep growing. So I think that cannot be taken away. There will be problems like loans turning bad for a short period of time. Now the banks have to make sure that they revert to mean somewhere and figure out that they are principally on the right track in terms of lending systems and all these other policies that they have. But otherwise, the retail franchises cannot be taken away from these people. The network stands where it is.
Right. But, I know you cannot comment on stocks, but for a name like ICICI Bank, just as an example, they have all their subsidiaries listed, which has a value. So the insurance business is now doing very well as per markets. Securities has been listed at a different valuation, and the core banks are now starting to look cheap because you have the value of this. Would that be the correct approach to buy any of these names or any of such names?
I think I would like to defer to what Mr. Buffett has said about banks. And he said that when you're buying a bank, you should look for quality and it might come at a little expensive valuation, but that quality has a meaning to it. It's like they have these processes in place which will not fail. And of course, one of the banks that he has owned has also demonstrated a lack of process somewhere in terms of facing a big probe and fines. But that happens. The point is, can you recover, and can that system in place continue to grow that network of that bank and keep that business afloat? I think in that case, quality should be valued.
So PSBs should be a complete avoid, you're saying?
We have never owned PSB stocks in our portfolio.
So what are the newer opportunities that you're looking at, considering you're saying that, this is the time that you're doing a lot of back-end, research work? Where do you think the new growth opportunities are going to come in from?
So we see the trends that are already established, they are still playing out. So we have banking, the one trend that you established is still playing out. The tech trend is still playing out. We don't have to look for too many opportunities beyond that. The point is you have to keep tracking of how these opportunities can be affected by new competition. Or for example, in case of Facebook, we have seen that there were data privacy problems, which led to something that the company had to go and represent themselves in government and talk to them.
Right.
Explain to them.
So, you said about tech. So, tech, of course, you spoke about the international ones. Do you track mid-cap IT here in India? The sort of move that has happened in Mindtree or any of the other, anywhere where there is a digital word and which is done well, has essentially done well. Would that be a proxy play to some of this growth?
So, interestingly, like you said, digital is a very abused word. Even the contract has 90% traditional work and 10% digital, the contract becomes digital directly. So it's a narrative thing that people are working on. The most important thing is that you should understand there is a lot of volume of work to be completed in the market. It's not like customers are saying that we don't have IT work anymore. It's just that the pricing at which the work is being given to the vendors, that has changed over a period of time. So the newer technologies will obviously have some premium because there is less staff available to work on those. But traditional businesses, along with newer things, that's what you're seeing the volume growth in many of the companies.
Right, but when you talk about the Indian IT space, can you just tell us that now it will be a differentiated move? So the company that gets work and executes it properly will get more and more work versus unlike earlier where every company was getting a good amount of work, say about 10, 12 years back?
I think right now, if you look at it, it's going to be the basics of business, the sales productivity. So if you have a very efficient sales team, you can keep churning these work far more often. Because the longer term contracts which we saw in the past heydays of IT, they are now shrinking to smaller term contracts. So you'll need the sales efficiency and the sales team to constantly keep churning new accounts.
What about consumption? Because that's where you're seeing the maximum number of volume growth, be it Dabur, be it Titan, and how strong the management commentary has been. Today you've got Jubilant, and we hope that the same store sales growth, continue the trend that we've seen in the last 2 quarters. Urban consumption as a trend has really managed to stand out. I know Dabur is a rural flavor too. What within this pocket do you like, or do you think the valuations have reached the peak now, so there is only that much the stocks could move?
So not sure about the valuation peaks, but valuations are certainly stretched. So if you're getting 8% earnings growth, but the stock is trading at 50, 60 times earnings, I don't think it's a great opportunity for us to look at them right now, but we keep tracking them. It's not like we are not aware of what is happening. You have to keep understanding. Basically, it's about the rational decision of making how much you pay for what kind of growth you want. And sometimes you miss on opportunities because you think they are very expensive. So it's okay.
Okay, on that note, thank you so much for taking the time out, Raunak, and always a pleasure having you on the show. That was the view coming in from Raunak Onkar, the research head at Parak Parik Mutual Fund.